Wall Street kicked off June at fresh record highs today. The S&P 500, the Nasdaq, and the Dow all set new all-time closing highs. And yet underneath, this was one of the narrowest record days we've seen in a while. Start with the scoreboard. The S&P 500 added nearly 20 points, up 0.26%, to a record close right around 7,600. The Nasdaq climbed 114 points, up 0.42%, to 27,087. And the Dow tacked on 46 points, up 0.09%, basically flat, to 51,079. All three at records. But here's the tell. The Russell 2000, the small cap index, didn't come to the party. It fell 0.47%. And across the whole market, fewer than 4 in 10 stocks rose on the day. Let that land. The major indexes printed record highs, while most stocks actually finished lower. That's not a broad rally. That's a handful of giants doing the heavy lifting. And we know exactly which giants. The entire move was the AI trade. Nvidia jumped more than 6% after unveiling a new chip built for personal computers. That one launch rippled outward. Dell rose more than 10%, helped along by a Morgan Stanley upgrade that more than doubled its price target. HPE Inc. gained about 8%. ServiceNow added roughly 10% as software stocks came back into favor, and Microsoft rose about 2%. The flip side of that very same chip news, Qualcomm fell nearly 9%, and Intel dropped too, on worries about tougher competition in PCs. One company's breakthrough is another's threat. Now, the reason the Dow couldn't keep pace with the Nasdaq sits over in the commodity pits. Oil spiked. West Texas crude ran up as much as 5% before settling near $92 a barrel, as hopes for a quick end to the US-Iran conflict faded again. Higher oil leaned on energy-sensitive cyclicals, industrials, and financials, the kind of names that weigh on the Dow far more than the Nasdaq. Rising yields didn't help. And the VIX, Wall Street's fear gauge, ticked up nearly 5% to 16. A few more names worth your radar. Hewlett-Packard, Enterprise closed up about 9%, and then spiked in after-hours trading on an earnings and guidance beat. Though after-hours moves are thin and noisy, so the real verdict comes at tomorrow's open. And in deal-making, Barry Diller's People Inc. made an offer for the rest of MGM at $48.30 a share, a 24% premium. Step back, and the picture is this. The S&P has now risen 9 weeks in a row. Over the weekend, J.P. Morgan's Jamie Dimon warned that markets may be underpricing risk. He used the word exuberant. And the breadth we just walked through says the same thing in numbers. When records get set by fewer and fewer names, the rally gets more fragile, not less. It doesn't mean a top is in. It means the cushion is thinner than the headline number suggests. A record built on a handful of stocks is still a record. It's just a narrower one than it looks. And narrow is worth watching. We cover the markets on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.